Tesla, Tesla, Tesla. All eyes on Tesla stock here today. Got a few things I want to react to in this video here today. First one up here, I want to hear from ARK Invest, Tasha Keeney, speak about Tesla stock, and I'll react to that, kind of share my opinions. The fact that Elon Musk was right about EVs doesn't mean he's going to be right now. That should be an interesting one to get into and react to there. Then I want to get into this video. Leon Cooperman, a legendary person in the financial markets. He's talking about we're heading into a financial crisis? What are we talking about there? That should be interesting. And last one up here, Meta's reporting earnings tomorrow. So we're going to speak about Meta stock generating more ad dollars than its competition. I want to share my opinions and thoughts on that. Tesla earnings, I will be live streaming on Twitch. Pinned comment down there if you want to follow me on there. I'll start that live stream probably around 12:30, 12:45 today. And then that will probably be about a 3-hour live stream, I would say, on Twitch because of the earnings call. Okay, so that will be down there. Alrighty, let's get into this.
Own Tesla, you don't drive a Tesla, you don't care about Elon Musk. Maybe you should care about Tesla stock. It could be very important for the market. Here's why we say that. Tesla has 3.18 billion shares outstanding. It's in over 350 ETFs. It's got huge options activity, and it's also used in all kinds of derivative trades on Wall Street, things you've probably never heard about, like Delta One strategies, etc. The bottom line is Tesla is a very important stock. And let's be fair, because again, that's what we do here on Last Call. Tesla, even with the recent woes, has still made a lot of investors a lot of money. The stock was only $15 a couple of years ago. So if you bought it then, even with the downslide, you've done very well. But let's talk more about Tesla, its importance to the market, and maybe where all the EV makers are going to be headed, because Tesla reports numbers tomorrow. Joining us now with more is Tesla investor and ARK Invest Director of Investment Analysis, Tasha Keeney. Tasha, thanks for coming on again. There's two ways to look at Tesla. A, it's been a massive moneymaker for millions of investors over the last decade. Or two, in the last couple months, it's not been. How do you see it?
3 years, actually, technically, it's been a money loser.
Yeah, I think, at ARK Invest, we're long-term investors and we care about disruptive innovation. So, as you said, Tesla is important to...
Hold your horses, one flip and flapjack and moment. Long-term investors, based upon some of your guys' activity, I don't know about being long-term investors.
Equity market. I'd say it's important to the world at large. I mean, it's single-handedly pushed forward the electric vehicle industry. I think it's going to do the same for autonomous driving. So that's what we're focused on, that long-term story. And I think that given the recent price action, it really suggests that investors are ignoring what I believe will be a massive opportunity in the robo-taxi network. And I think that's pretty short-sighted.
What's wrong with Tesla stock?
Oh my gosh, $2,000 by 2027. I hope, but no.
You guys do great work, great analysis there. You got a $2,000 price target on the stock. It's a lot higher than it is now. What's wrong with the stock, Tasha?
Be happy with 500.
Well, I think investors are concerned about demand for electric vehicles, demand for Tesla specifically. They're looking at this year's numbers versus last year, at the current growth rate of deliveries. Of course, deliveries did disappoint relative to expectations this past quarter. But I think what they should be focused on is let's zoom out and look at electric vehicles as a whole. They are now price competitive with gas-powered cars in many ways, thanks to Tesla. And so Tesla is a leader in that industry, and that story is not going to change. So when I think of the auto industry as a whole, Tesla's not immune to interest rates. I don't expect them to be. We heard that they're in between growth curves on the last earnings call. I wouldn't be surprised about some short-term upsets, but I think the long-term story is electric vehicles are here to stay. Tesla's prices are so competitive, it's going to be very hard for any other company to catch up to them at this point, particularly in the US market. And on software and autonomy, I think they have a data advantage that is unparalleled.
But yeah, and I've said people don't want electric cars, they want Teslas. I've driven all of them. It's a totally different thing. Does the Cybertruck matter to Tesla? It's a niche vehicle, got a lot of hype, right? They had a recall, right? There's some pedal issues and whatever. They'll fix that. Does the Cybertruck matter to Tesla stock at all?
Yeah, I'd agree with you in terms of, sort of the short-term thinking around the Cybertruck. I think we actually thought the Cybertruck would be bigger than it was. It turns out they had it was harder to manufacture than Tesla thought. So I think, given the price point, It'll stay at like not necessarily a niche car, but certainly lower volumes than we were expecting. But I think what really matters to Tesla, again, it's robotaxis, it's the long-term picture for autonomy. So I'm really excited to hear about what Elon has to say in the earnings call. He's been teasing us all with his Twitter responses about what he thinks that their full self-driving software might be capable of, in the next months to say year or so, and what markets they might enter. And we also have the robotaxi event unveil in August this year, of course. So that's, Tesla's dedicating manufacturing resources to this platform. I think that shows their confidence.
Yeah, but let's be very clear about what everybody really wants to hear on this conference call. Everybody wants to hear that price cuts are done and margins are going to go back up in the back half of the year. That's what everybody wants to hear. We hear that, we're off to the moon, actually. We don't hear that, we're going to be floundering, okay? So that's what everybody wants to hear. Long-term stuff, the long-term people already know all this stuff pretty much, and they're already confident in that, right? And you're not going to sell shorter-term mindset-focused people on robo-taxis and this and that. They're just not going to be sold on that. They want to hear margins going back up, price cuts done. The fact that Elon Musk was right about EVs doesn't mean he's going to be right now. What are we talking about
Results
here?
Later today, investors will hear from Elon Musk in the wake of company layoffs, price cuts, and the public attention to his pay package. Joining us right now for more on the company's governance as we
Elon Musk package.
Into that report is Gautam Mukunda. He is lecturer in the practice of management at the Fletcher School of Law and Diplomacy. He's also the author of 2 books on leadership. And Gautam, why don't we start with who Elon Musk is and what he's accomplished to this point?
I mean, it's not a minor. It's not a minor story. If you created a character in a comic book and called about Elon Musk, even comic book writers might call it implausible. He reinvented automotive transportation, and in SpaceX, which might actually be his most impressive company, has cut the cost of putting something in orbit by a factor of 27, not 27%, a factor of 27. So that scale of achievement makes you understand why his board and why corporate governance have cut him a lot of slack over the last few years. But it might be time for that slack to end.
Why do you say that?
So if we step back for a second, let's say that you believe that Elon is a business genius. And, I'm not going to argue that you're wrong, given the scale of his track record. The thing about being a genius is that it's a retrospective title. You only have to do it once. You only have to be right once when everyone else in the world is wrong. And you get to sort of claim that for the rest of your life. And the thing is about even the greatest geniuses who've ever lived is they don't get to be right. They're not right all the time. Albert Einstein is the greatest physicist of the 20th century. He's the person we sort of always cite as the ultimate example of a genius. And Albert Einstein made no real significant contributions to physics after general relativity because he just could not accept where physics was going. He was still a genius. It just means that he wasn't right anymore. So in the case of Elon Musk,
Oh, go ahead. Finish your thought.
Go. In the case of Elon Musk, right, like the fact that he was right about electric cars, the fact that he was right about SpaceX doesn't mean that he's going to be right now. It might mean that in fact, the very tendencies that made him so gifted earlier make him really poorly suited to running a company of 150,000 people that's facing disruptive challenges completely unlike those he's mastered in the past.
Gautam, I hear your point. Just because you're a genius once, or in Elon Musk's case, maybe 5, 10, 15, 20 times, doesn't make you right on everything. But if you're looking at that leader who founded a company, or 2 companies, or 3 companies, versus a board of directors who's been along for the ride, I might pick sides with the founder more often than not. If I'm playing the odds of who's more likely to be right, if I'm playing the odds of, where I think I'm best off, that might be how I would go down with it too. Again, not that anybody's right on everything. Nobody's right on everything. But you can probably look and play odds with somebody you think is more likely to be right. And I think that's why so many of these founders and geniuses are given so much leeway. They saw things nobody else did. You can look at Mark Zuckerberg, who, everybody else on his board thought he was crazy for not selling for $1 billion when he got an offer that came in. I mean, there are reasons that they are where they are, and they may not be right all the time. But if they're sticking within their own businesses, not getting outside of their lanes, you might be playing the right odds by sticking with them.
Good
So, I mean, I think that's a very natural human tendency. And look, if I was on the board of Tesla, I would say, hey, Elon, I'm going to give you a lot of benefit of the doubt that you were right when other people were wrong because you've been it before. But so I'd say that natural human tendency is actually a way to betray us. Like, to pick the same example, if physicists had done that for Einstein for 30 years, physics would have been delayed for 30 years as they just didn't pursue all the avenues that were right. So in Elon's case, it's not that he doesn't, it's not that he hasn't done this in the past. Let me set two sets of problems. One is Tesla now is very different from Tesla 10 years ago. And when you think about leadership selection, when you think about who the right leader for an organization is, what I often tell my students is that leadership is not a ranking problem, it is a matching problem. You're not looking through the question of who is the best person in the world in all circumstances. That's not how leadership works. What you're thinking is who is the right person for the particular set of circumstances that we're in today. The very fact that Elon Musk was, for the early years of Tesla, not just the right person amongst some set, but the most right person in the history of business, doesn't mean that he's the right person now when the situation Tesla is facing is completely different. And in particular, it doesn't mean that he's the right person who should operate without restraint. So I'm not saying he's the wrong person. What I'm saying is, if you are the board, you also have business judgment. It's your job to ask him, okay, what is your strategy for dealing with Chinese electric cars that are going to come onto the market at $20,000 a car? He may have a strategy that no one else would come up with, but you, even if you couldn't come up with it, are able to evaluate it. And that is your job.
What? What in the world? So, listen. I've said this in the past. If Elon was to go away from Tesla, like Tesla's next 10, 15 years is already set up, like they're in a great position. With that being said, Tesla's still a super innovator company, which means the company's better off with Elon still at the helm of that company because they're a super innovator still at this point in time with all the products they have in the pipeline, all the projects they're working on. Elon's still the right guy. It's not at that Tim Cook, taking over for Steve Jobs quite time in terms of like innovation starting to die and, hey, the next guy can just run this 10, 15, 20-year growth cycle out. So that's my view on that. Tesla's okay if Elon went away, but it's better off if he's there because of all the innovative stuff they're working on. And he does a great job of attracting, just extremely impressive folks that are the ones that are actually boots on the ground working on all these different products and projects. Okay, next one up here, billionaire investor Leon Cooperman. And let me say this before we get into this one, okay, because he's talking about we're heading into a financial crisis. That's interesting, right? We're going to find out very shortly, that this is not a Tesla specific problem. There's problems in the auto industry, and you're going to see that over the next few quarters. From what I'm hearing about from these dealerships, business is not good. I think we're going to see that play out over the coming quarters for these other auto manufacturers. And then people are going to wake up and say, oh, this is bigger than a Tesla problem.
We've worried about debt. I remember the Pete Peterson Foundation and having David Walker on, and we have worried forever about it. And it continues to climb. I know it's something that does stick in your craw and makes you at least nervous that at some point it's going to come home to roost. I don't know when. I don't know if you do either. But you're not in cash, so we're going to go over some of the stocks that you own. But can you just give us your outlook, near term and intermediate term on this market, which is down in the last couple of weeks? Is this finally a reckoning with that, or something else?
Well, I think there's a lot of things going on in the world. We have an election coming up in November. We have two candidates that are generally viewed as, one's bad and the other one is worse. We don't want to see these guys run, but I'm hoping that they drop out, and that's a hope rather than a forecast.
Yeah, Leon Cooperman, B-Man and T-Man are not dropping out. I mean, no.
And I would say that the debt situation. You're right. I'm concerned. I think we have a system of leadership in this country that has evolved to a leadership at a crisis. On your program a number of months ago, you had Mitt Romney and a fellow from Virginia, Manchin. And they basically endorsed Simpson Bowles, which was, I think, about 8 or 9 years ago. The only problem is nothing was done about Simpson Bowles' report, and the problem is 3 times larger today. But you have no idea when the stuff hits the fan. I remember very fondly how Pete Peterson and Joe Fowler, former Secretary of the Treasury, who was a Goldman Sachs partner, a very real gentleman, ran full-page ads in the Wall Street Journal alerting the public to the evils of the budget and trade deficit. It was 1972. So here we are 50 years later, and the only significance of the deficit is we have the lowest interest rates in the history of the world. So nobody knows when the stuff hits the fan, but ultimately, if deficits don't matter, as some people insist, then I'll be too conservative. But if deficits matter, and I think they will ultimately. I think we're heading to a financial crisis in this country. But we have a deficit that is very large at a time when the economy is reasonably fully employed.
You give the Fed what kind of grades, Lee? And I know you're.
I give the Fed a low grade. I think what I would say is they held interest rates at near zero for 10 years. And at the time, Powell said to the public, the stock market is not expensive given where interest rates are. They never bothered telling people interest rates didn't belong to zero. Then, very abruptly, in a matter of 12 months, he raised interest rates 500 basis points, which destabilized the system. Now they're talking about cutting rates and that the Fed is too restrictive. There's no signs that I can tell of in the economy or in the market that the Fed is restrictive. The stock market is near a high. We're seeing lots of speculation in the market.
Yeah, Cooperman, I got to push back against you there, sir, in all due respect. You know this. Like, when it comes to the Fed raising rates or lowering rates, there's lags there. Those lags take time to hit, right? And I think we are starting to see some effects. Look at, for instance, existing home sales for the past year. Existing home sales are near great financial crisis type lows when it comes to existing home sales. I think that's a pretty telltale sign. Ask realtors how they're doing out there, real estate agents, brokers. Ask people in the mortgage lending business how they're feeling over the past 1 to 2 years. They're going to tell you they're in a recession, okay? And then auto sector, Tesla having to do that sort of massive cut, 15,000 employees. If you ever hear Tesla cutting like that, a growth company, that sounds a little recessionary. And I think from these other automakers, you'll hear that over the coming quarters. So the Fed lags are catching up. It's just an industry by industry situation, right? And so everybody gets impatient, but you learn that in Economics 101 in college, like about Fed lags and these sorts of things. Well, maybe not 101, but you learn these sorts of things over time. And then you're like, it's not like Fed raises interest rates and the next day, everything's hit. It's over a period of time. It usually takes 1 to 3 years.
But the stuff with Trump, the SPAC, is an example of the speculation in the market. So I see no signs between the economy and performance and the market's performance that the Fed is too restrictive. I expect we'll get 1 or 2 cuts in rates in the short end. But, the long end, I think, is overvalued, which is a real problem because all the valuation models that one looks at as the stock market expensive relative to bonds, I think bonds are overvalued. Prior to 2008, in the great financial crisis, the 10-year bond yielded in line with nominal GDP. So if you take inflation at 3 to 4%, not 2, and add to that real growth of 2%, you have nominal GDP growing 5 or 6%. And I don't think the 10-year bond would be interesting at 5 or 6%. To me, at least. I'm an equity-oriented guy. I find lots of things to do in the market that make more sense than bonds.
Although you have some bonds, let's talk about some of your holdings. Like you're not in cash, obviously. Do you have a higher cash component right now, given your market outlook, or are you fully invested? On average.
I'm pretty heavily invested. I have 15% of my family office assets are in energy. About 20%, and it's something I've been very wrong on timing-wise, but I think, it falls in the category. If something sounds too good to be true, the odds are it's not true, is Legato first lien bonds. They're trading around 15 cents on the dollar. It's a complex story, but the end of the day, I've spoken to 7 major law firms, all say the same thing. The government's behavior here has been disgraceful. 7 years ago, the Department of Defense falsely, and I say falsely, alleged that there was spectrum interference. The only body responsible for setting spectrum policy in the country is the FCC. They studied the allegations for 5 years. After 5 years, a bipartisan group voted 5-0 to approve the use of spectrum. Then all of a sudden, the Department of Defense changed their story. They say we want the spectrum for national security purposes, and we're not going to tell you why. Okay, I have no problem with that. I'm a loyal American. You just got to pay for what you want. And finally, the company, belatedly, in my view, sued the government. They're suing the government for $40 billion. And in their lawsuit, they say they have evidence that the government lied under oath. Not a nice thing. The government basically is using their spectrum without compensation. And the government has made a sale of the company very difficult because of the Turner Amendment, which says that if you own without a spectrum, you can't do business with the Department of Defense. That stuff should be overturned in the lawsuit, at which point I think the bonds go from 15 to par, plus you're getting 17 half points of PIK interest every year. Now, it's a 144A piece of paper, so it may be too complicated for your audience. I don't know.
It's too complicated.
To me, it's a giveaway.
Government being corrupt, doing things shady? No, never happened. Meta, let's talk about Meta.
It's good to see you today. Brent, what do you see in the tone of tech going into these big earnings?
The tone is really mixed. It's overweight semis and hardware, and it's really negative software. I'm primarily a software analyst. So software's down 2%, semis are up 16% year to date. So it's very different. We're dealing with kind of beach weather and semis and hardware. We're dealing with Arctic blast inside software right now. And so I think it's so negative in software. It bodes well for a lot of these companies because everyone has been making so much money owning Dell, owning NVIDIA, that they've had no time for me. They don't really care about the group. And I think that's a signal. In the last year and a half, I haven't seen it this bearish on software. So semis and hardware have been the area that investors have made the most money. They want to continue to ride those stories. But I think at some point, you're going to see a transition inside tech back to software. I think everyone's waiting for the summer, waiting for more AI data points. So it's again, a tale of a beach and an Arctic blast in software. So it's very mixed right now.
And who wouldn't rather be on the beach? Let's start with Meta then about earnings this week. You heard Steve Kovac there talking a little bit about AI increasing engagement in Instagram and WhatsApp and really all of its broader platforms. Talk to me a little bit about the opportunities with Meta.
Yeah, Meta has some of the best checks in the internet. Advertisers continue to go there because of the effectiveness of their platform. So we continue to see really high engagement. Advertisers are spending more money. There's definitely been a shift to Meta, even away from Google and other social platforms. And the checks have been phenomenal. And they've been trending that way since last fall. And I think this goes through, the privacy lapse, the refocus in AI, and the quality of the Instagram platform is like no other platform for advertisers to be on. So we continue to hear good things. They will generate incrementally more ad dollars than the rest of the industry. They effectively continue to be very disciplined on expenses. So Zuckerberg, every call opens up and says, we have 3 billion people touching our platform every day, and we're focused on doing it efficiently. If he keeps with that tone and they continue to roll out some of these innovations like they're doing with Meta AI, there's going to be more users that want to be on the platform. So hearing continued really good things from the field about where they sit.
I was speaking.
Yeah, here's the deal. Okay, if you want to know if Meta stock's a buy, the answer is yes. Every freaking dip on the stock is a buy at the end of the day, especially if somebody doesn't have a position built.
Last hour with Deirdre Bosa about Meta and whether it gets sufficient credit for its positioning in AI and that it may be sort of a stealthy gainer in that area. Would you speak to that point and compare it on AI with, for example, Microsoft and Google?
Yeah, I think they're stealthier. I think if you think about where they sit, right? So if I'm sitting in my office, I'm not using Meta, I'm using Microsoft. So I look at Microsoft and Amazon as a great way to play AI for the enterprise. And for the consumer world, Meta and Google and others are in a better position. So we kind of put our investors in different buckets of, hey, this is more of a consumer-facing story today. Over time, Meta could get into the enterprise. They have open source Llama, which is their one of their AI languages. We think that could be a really big business over time. So today, it's largely consumer-facing. It could be over time they have a mini enterprise business inside the company. But today, it's simple things like you're a small business and you want to have a sidewalk sale and you want to create a campaign. Well, with AI, you can create these campaigns with with not bringing in expensive video shoot and makeup artists and all these things to create the campaign. And finding people on the platform is another big thing.
You think that the AI winner out of this group, though, is Microsoft. Why?
In the enterprise, and for a consumer, it'll be Meta. But for the enterprise, Microsoft has led the charge. They've been out in front. Nadella has nailed this. They have partnered with the best AI company, OpenAI, and they've effectively ingrained it in every single product manager that you're going to have a co-pilot in every one of these businesses, from apps to infrastructure to security, all the way up and down the stack. And they're monetizing this better than anyone in software, and they're the most trusted right now, which is a huge thing in AI. And so for the enterprise, Microsoft will win, and they are laps ahead of anyone else.
Brent,
in consumer, Meta will be in a really good spot.
Really appreciate your insight, Brent. Thank you for joining us today, Brent Thill.
There's a few companies that come to mind when I think about the winners of AI. Those companies that come up first, obviously NVIDIA. Next one I think of when I think about AI and winners, I think about Palantir. Next one I think about Microsoft. Next one I think about is Amazon, actually, with a lot of the foundation work they're doing. Next one I think about is Meta. And then also I think Google McDougal will be successful in AI over the long term as well. So those are some of the ones that I kind of think about, and Tesla Masla as well. Okay, so Tesla live stream, it's coming, baby. Follow me, pin comment down there if you want to join me for that live stream. Much love and have a great day.